Buddy.
All right, good morning, everyone. Welcome to Forms class. Today, we are going to be going over the newly updated Form 22VV. There's been a lot of talk lately in our industry about insurance, and it's been kind of a tidal wave that's been coming. Ever since the condo that collapsed in Florida, I think was kind of the epicenter of when things really shifted for the insurance world, because it put a lot of, insurance companies upside down.
Upward pressure.
Yeah, the upward pressure, definitely. So I think that's where it kind of started. And I know that was, didn't that happen about 4 or 5 years ago now? Gotta be somewhere in there, easily, but probably, close to 5 years. When we went to Florida for that NARA trip, we did get to see part of the site to where it was, and it's still completely fenced off, or was at that time when we went.
So sad.
So it's definitely something to keep in mind about why these changes happened.
Also, all the California fires,
Mhm.
the fires in Hawaii.
Yep.
And then insurance, that's like every 3 or 4 years, they can recast what their premiums are. And so we're right at that recast. And so you're gonna start seeing people, insurance not to be renewed.
Yeah, in fact, anyone who does sales on east side of the mountains at all, if you're doing anything in Suncadia, just like this form, anything east side of the mountains, this might be a requirement. 22VV, probably gonna have to be in every single one of the deals you write. Because there are things happening right now because of the fires. Insurance companies are dropping people if they're in a zone that's too, too high of a potential for fire. So, and Suncadia have been, a bunch of homeowners have been receiving notifications of being dropped right now. So, yeah, and that's not that far from us.
Yeah. I have a client in Enumclaw. They have the wedding venue, and their insurance isn't going to be renewed, and it cancels 2 days before our closing. So now we're going to try to modify the closing dates so that they don't have to, because to get that for 2 days, it's a pretty substantial payment. And if you cancel it in 30 days, you got to pay back 25% of the premium.
Ooh.
So we're going to try to modify closing date to prevent that from happening. So just kind of a little FYI.
Curious on that deal, did the buyer include the 22VV?
No. And not like I'm trying to hide the ball or anything, but I was like, well, we're under contract with you to purchase a new house. And you would like to get on that house newer.
Yeah.
We want to close early so that you want to move into your new house there. You don't need to make mention of the insurance, not like we're hiding the ball.
Yeah.
But that's the reason why you want to move, right? Yes. So.
Yeah, okay. I mean, that's something to definitely keep in mind. All right, guys, let's jump right in. This update just happened last month. It was April 2025. You can see the form revision date. And most revisions are usually kind of small. This one is a big revision. This had a lot of changes. So we really need to take our time as we comb through this through its entirety. And this is the homeowner's insurance addendum to purchase and sale agreement. And it is a VV, not a weird W. A lot of times people are like, I can't find this form, Eric. Like, I don't see it. I see the 22W. Like, okay, yeah, you look for VV. All right, so use, attach this addendum to the purchase and sale agreement when the sale is conditioned on buyer obtaining a binder for a standard homeowner's insurance policy and binders for any other property coverage buyer selects in the optional list. An insurance binder serves as a temporary certificate of insurance before the formal insurance policy is issued. When's a good time that buyers should be ordering these? Kind of start with that. What do you think? You get
Once they're pending, mutual.
Mutual? Okay. Like immediately you get mutual, it's time to talk to insurance?
Mm-hmm.
I mean, but I'd be shopping before even looking in a specific area, right? Like,
I mean, maybe even if they're about to be writing an offer.
Absolutely.
Especially now.
Especially nowadays, that's the thing that, you know, kind of want to make sure you guys take away from today's session is understanding the fact that now that we know this new world, you know, what's going on in insurances, I think it's absolutely critical that we tell the buyer, say, okay, who do you have your homeowner's insurance, or excuse me, your car insurance through? Go ahead and start with that insurance agent and say, you're thinking of buying a home. Here's the property address we're considering buying. What does it look like for insurance for this subject property? That's probably the way the conversation should go.
And a lot of times if you can bundle it, you'll get a discount.
Yeah.
Off of it too, if you have
Mhm.
other insurances, like through car and whatever.
The ones that we recommend highly is when it comes to condos and townhouses. Because even those are not Allstate, for instance, they're not covering condos because of how
Yeah.
expensive it is. And so if there's people that are looking at condos or even townhouses, we actually recommend it right away, as if they're even considering putting an offer, is what we do.
Yeah.
Well, and that could also bump out your DTIs on your payment if the insurance, if you think your insurance is gonna be like $1,000 a year, then it comes up to like 2,500.
Right.
Now that affects your DTI and your buying power as well.
Yeah, it's really, again, critical to have conversations up front and really making certain that you're roping in that lender and communicating with them. Because they're the ones that usually are putting together the package, trying to push through to the underwrite, get an approval, and they're handling their debt to income ratios and they're looking at everything. And insurance is a piece of that because you got to have it. If they're selling that loan, they have to see that have it, or they're not going to even touch it. I don't know any of them with secondary market would buy it, right, without the insurance already on it.
No.
There's no way, huh?
You have to, well, and if you get dropped, sometimes what the lender will do is they'll mandate you to go with their insurance, which could be whatever it costs.
Yeah, you're
After the
right.
fact, because the underlying asset has to have insurance on it for it to be lendable.
Yeah, Jason's got a lot of insight. Yeah, I like to lean on him in these sessions, especially when it has things to do with lending, because he used to be a lender. So it's like great having that insight. All right, let's jump right in. Citizen filling in the form. Following numbers obviously refer to the numbers shown in the manual. So we go down here. We can see number 1 is the date of the agreement between the buyer's name and the seller's name. And concerning the address, so there's the property address. And let's get to the first part. Premium and deductible. So insert the maximum premium and deductible amounts set by the buyer that the standard policy of homeowners insurance binder may not exceed under this contingency. Insert premium and deductible caps set by the buyer for each additional coverage the buyer selects from the optional list. So here's the first thing we're kind of going to dive into. Let's see. Esteban, you want to read this first section here, lines 5 through 12?
Yes, I can. Notice the buyer concerning homeowners insurance. The ability and cost of homeowners insurance depends on a number of factors, including buyer's personal insurance history, buyer's financial and credit history, the condition, construction type, location of the property, risk of natural disasters, and other potential loss of the property, and the claims history for the property. At the time of the application, most insurance companies will only issue a binder, which is a temporary commitment to provide insurance, which is not a guarantee that a policy would be issued. After issuing the binder, the insurance company will take additional time to make a final decision about issuing a policy. The coverage is to be provided in the premium. Accordingly, it is important for the buyer to apply for insurance as early as possible.
There it is, right there in the form. Now it's, stating that buyer needs to apply as soon as possible, realistically. So the next section here, this is the part that I think is really going to be tough on you guys. Because first of all, who's supposed to be setting these numbers?
The buyer.
The buyer.
Buyer.
Yeah, so buyers are supposed to be deciding it. How many buyers know this?
Zero, very
Yeah.
minimal.
Yeah, very, very few of them. So, you know, they're gonna be leaning on us to give them, you know, insight and hopefully what to put in these boxes. This agreement is contingent on buyer obtaining a binder for a standard policy of homeowners insurance at an annual premium not to exceed blank percent. So the first thing it states is in the parentheses, if you don't fill it in, is half of 1% if not filled in of the purchase price. So half of 1% of the purchase price. So $500,000 home, 1% is $5,000, half is 2,500. So it kind of tells you, so you can kind of calculate it that way. And then it goes straight into with a deductible not to exceed blank, and it says $2,000 if not filled in, exclusive of all additional coverages, example, art, jewelry, earthquake, etc. So in addition to obtaining a binder for a standard policy of homeowners insurance as set forth above, this agreement is contingent on buyer obtaining a binder for select all that apply below is the next section. But what do you think? Is this a good amount?
I mean, I think each spot's gonna be, you know, on a case by case scenario, and this could be also a good escape clause if someone wants to be cheap and maybe they're gonna waive inspection, but put something crazy low in here to get them out because they know they're not gonna be able to catch that, right?
That you're getting a little ahead of us.
As long as that's how.
But that is definitely something I was going to bring up about the listing brokers need to be, you know, paying attention. Because if the form is used, what if someone said, what if they put in a super low amount?
So as a listing broker, would it be good to be contacting, like, so you're getting a listing on market, connect with your insurers, right?
Mhm.
To get a ballpark kind of figure on the average, you know, like with decent credit and where, you know.
Yeah.
Have those kind of figures prepared so you know what to anticipate.
Yeah, the seller will have their insurance information, you know, most of them are, you know, most sellers will understand and know this and say, well, okay, what rate are you paying right now? Who is the rate with? You know, do you mind me reaching out to your, you know, insurance person?
Does your insurance require earthquake? Does it-
Yeah.
Does it require?
Flood insurance,
And where you are is, yeah.
the new one, fire.
Yeah, fire, yeah. No.
So this is really hard. Can you see how this is a little bit of a, you know, kind of a bugaboo here? It's
Yeah.
like, oh my goodness, how are we gonna navigate this? And you don't want to put it too high, because then it comes into a scenario where, like we talked about earlier, what if the lender's like, with a premium that high, if
Yeah.
like their debt to income rate, that's out of whack, like they can't afford the home, they won't qualify. So knowing this now, what kind of things or ideas or what's going through your head? Zoom people, what do you guys think? What types of conversations are you thinking about now that we're reading this?
Time to have another class with that insurance broker you had come about to basically, because this, I mean, can't remember when he was here, Eric, but basically this would be pretty important to kind of see the direction that homeowners insurance is going. Because I don't have an idea where to put it in, and it's changing. And according to him, it could be going up quite a bit.
Yeah, we just had him in March. I'm waiting for Aaron. We're going to get some new information about some insurance stuff. In fact, there's a class that just got popped on our schedule. I did send that yesterday through the calendar invites. But that was for the new CRES updated insurance thing that they're going to be implementing that helps give the seller some additional coverage in the event they get sued in the future. And we, as brokers, get additional coverage for E&O for utilizing this new program, which it's a no-brainer why we would not do this is, and it actually might help you guys win a few more listings, just be one of those little difference makers. So that's tomorrow, and it's Zoom only. I think it was at 1 o'clock, just going off my memory.
I get it, that one.
Check your email. Our calendar invite I did send. So
It was sent, but are you gonna do more than tomorrow? I'm gonna be on a different class.
they did ones that we've already, like, they scheduled ones in the middle of our other classes and stuff.
It is
Yeah.
tomorrow one.
1 o'clock tomorrow. So we'll get the recordings and we'll get that out there and we'll get you guys more information soon, but insurance is, like I said, big topic that we're gonna be talking about more and more into the future. And you really have to be, thinking about every single deal you go and do. And just like Esteban even brought up about condominiums. They've had a struggle since that event, 5 years ago, when it comes to insurance.
Yeah.
So if you're writing up condos, you might want to even, talk to the listing broker, find out, have the lender, have the buyer check with their insurance person to say, check on this condo building. What does it look like for insurance if I want to buy in this house, in this unit, in this
And
development?
also those condos, they were like, a lot of them are losing like their Fannie Freddie standings. Because of deferred maintenance, because the deferred maintenance now is they've actually upped what needs to be done or what's categorized as
Yeah,
deferred maintenance. So they're losing their Fannie Freddie statuses as well.
Yeah.
I think to keep in mind.
yeah, a lot going on in our world. That's why it's so critical you guys come to these types of classes and stuff like that for us to discuss this stuff, to get to dive in deeper, because you guys know you can't really have transactional excellence without the knowledge of these types of things, right? That's the difference makers in your career.
And when you're like looking at insurance, all of them have like different underwriting standards.
Yeah.
So just if you just chose one to do a binder for, it could be completely different from another one. And also some insurance companies, they're also brokers. So they could actually broker to all of them out there. So it might not be a bad idea to get with a broker, not just go to like a State Farm or one stand-up one. One that could actually look at multiple different insurances at the same time, so you can get the best quote on that.
Yeah, I've asked Aaron about this form and to try to get a little more insight about how we should be filling this in, because it's a little bit scary. Because if you don't know, you don't have any time, what's a good fail safe to kind of keep someone under? And realistically, for a yearly cost of insurance, 0.5%, because half of a percent, you could do 0.5. That's what they're basically saying as a default. That should be enough. But, again, this is a scary thing for us to be filling in without knowledge of the exact client and the exact property and it coming from the insurance person. That's the part that's really going to be tough for you guys. Because I know all the time you go show a house, buyer's like, I don't know. It's like, we like it. We're not sure. But, all of a sudden a couple of days go by. They're like, you know what? We thought about it. We love it. We want to write it up right now. And you're like, okay. It's 7 p.m. I'll write it up. But now how much time do you have to get to know about the information about what you're going to fill in, especially if you have this form? What are you going to do?
One of the guys I know who's been a broker for a long time, just is now an insurance agent too. I wonder if he's thinking ahead or what, because his business has always been kind of, up and down, been doing it for a real long time, but is that,
Yeah,
I wonder if,
Well, it's a pretty substantial test you gotta take to be a insurance agent.
yeah, just maybe a couple months ago.
yeah.
Yeah.
All right, any questions, you guys? And again, $2,000 probably, for the exclusive additional, whatever, with the deductible, that's probably safe enough for right now, until I get any further information, from Aaron and, and the, in our, in-house legal counsel, and maybe even outside legal counsel. For now, I would say, let's stick to the defaults. And I think we'll be okay. But again, please, you gotta have some communication with the lender, the buyer, the lender, and then their insurance person, if at all possible. If the buyer doesn't have anyone, then they're like, I don't have anyone, or I've got some special car insurance, and the company doesn't even do homeowners insurance or whatever. then it's like talk to the lender, get a referral. You want to be able to get someone who can communicate. That's really the kind of key thing here. So,
Hey, Eric.
yes.
So just to reiterate everything, because kind of looking at this form for the first time really for myself. And so it sounds like this is something I should probably mention in, a buyer's consult right from the get-go, is just talking about home insurance, just to kind of set the tone. Because like you said, sometimes you'll have buyers call you at 7 o'clock wanting to write an offer and you're like, we haven't even had this conversation. And so just to be, I guess, proactive, having these initial conversations around homeowners insurance is critical. And then also from the listing side too, is just learning how to navigate this. So like Amit made some really good points not too long ago, just on how people might find an out. So I'd love to hear your thoughts on that later on, if you're
Yeah, so listing brokers, if you get an offer and it's got the 22 VV in there, your eyes need to drill into, 14, 15, and 16 lines here. And what did they write in there? If somebody wrote some super duper low amount, like a deductible of like $200 or so, or the percentage, and you're like, I don't think they're going to be able to get that. Like, that's way too low. Right now, I don't know if I would accept if it's got too low of a deductible that you don't think they'll be able to get.
They'll be able to get it, it just costs them more in their premium, which is like how it works.
Yeah, but then they can say, I'm out.
Yeah.
The buyer can walk. Because that's a way, for a little sneaky way that you could put this in here and say, oh, the buyer got they got a binder and it's too expensive. It's too expensive for the,
For the $200.
for the 200, yeah, $200 premium.
Yeah, well, probably more like 4 or 5%. The underlying asset is deductible.
Yeah, and like I said, I'm gonna talk to Aaron a little bit more. We're just navigating now through some of the, these new insurance issues that are coming up into our state when it comes to home ownership. So I'll get some more insight from her, but for now, I guess if you see something different in here, listing brokers, pick up the phone to the buyer broker and say, hey, can we get some insight on why you've wanted to put a deductible of $200 instead of something on average, here? Like your buyer, obviously probably can, hopefully they can afford it, but I don't want to see them walk away because, oh yeah, they're like, yeah, this is too expensive for a $200 deductible.
Could we do something like we do for the financing? Where we have the financing addendum in there, where you ask for the proof of funds letter and then
If they walk.
Yeah, and so if they use this form, say, oh, we're fine to accept this form, but we need to see your binder in place and what the amounts are in advance.
So watch this.
If it's a tricky situation, you won't put verbiage in the broker remarks too.
I love the fact that you guys are asking great questions today. So we need to get into the 90, because I think it's a VV now. Hold on. Yeah. So with having the 22 VV, there is the 90 VV, which is the notice. What do you see that's missing off of this form? See anything missing?
Seller.
There's no seller signatures. What are the 90 forms
90.
in general? You guys remember?
They're all
What are 90s?
decisions type stuff.
Notices. They're all notices. Notices are only signed by one side. They do not need mutual acceptance to an agree to release someone. It's because typically these forms are all connected to a contingency, right? So the most common one you guys see in average deals there's 2 of them, right? But there's something a little bit different on the 22A. So what's the most common one you guys see? You guys know?
Inspection.
Thank you. Inspection, 35. So in the 35, there's always, and any of the other contingencies, there's always this language. And it says, it'll be down here. I was gonna say, if. Okay. You're always gonna see something to the effect of this. Kind of, oh, yeah, there it is. I'm like, where's the if? If buyer gives such notice, this agreement shall terminate and the earnest money shall be refunded to buyer. And down here, there's buyer's initials, there's seller's initials. Seller's already agreeing to allow the buyer to walk from the deal. Right? So this language, this exact verbiage here, this attorney drafted language is throughout a bunch of our contingencies, right? You're always going to see this. When this is in play, when you see that and you got an agreement on this, it only takes the notice from the buyer, from the party, to give the notice that it's done.
It's already been agreed.
Because it's already been agreed. But now there's a second piece to this that most people still to this day always screw up. In fact, I had to get into an argument with a DB last night with one of our brokers who he was like, I've been in the business for 42 years and this is that and stuff over this exact thing where they had an inspection. The buyer elected to terminate. They sent the 35R marking the box that they're terminating. And they sent a, what do you think I'm gonna say? What's wrong?
They sent the inspection.
No,
Oh, excuse me.
they sent the rescission 51. The form 51 takes an agreement to what? To terminate the agreement. It needs signatures from both parties. Which realistically, that buyer's prohibited from requesting our seller to terminate that way. They don't even need to. It's already been agreed upon because of this exact language. And people kind of get this mixed up all the time. So in the event you have this language and it's in one of the contingencies and you have now sent the form 90, or in the case of like 35R, the most common, right? You send that, you mark that. You don't need anything else but the 90 or the 35R and a 50. Because the 50 releases it to escrow. It only needs the buyer and the seller to sign off on that because that goes to escrow. And escrow will not release those funds unless they have that agreement. So it is quite different than the 51. There's one more item that's on the 51. This is bonus question. If anybody gets this, I'll be surprised. But on the 51, there's something else that's on it that is not even on the 50. Does anybody know?
I'm achieving.
Don't look. Zoom people? I'll give you one little hint. By default, this item is 180 days. Do you guys know what item has a 180-day default? Tail provision. The tail provision is on the 51. So that actually is on there because when you terminate that way, right? It enacts the tail provision because the deal is actually reset to as if they've never even had a deal. But it helps protect the brokers in the event that they go and sell it directly to that other person. So that's why that language is on there. But you would never, ever need to use that when the forms actually have the language in it already. So you might get in arguments with some people that don't understand it. Annie Fitzsimmons has a perfect video. She actually gets kind of, you know how Annie like talks and she's very stern and this one, I would say she's got like a level of anger in it. She get like literally like mad in the video. It looks like she gets pissed in it. So something might have happened before she recorded it, or she was doing it because maybe she was dealing so many times with it and I don't know. But if you watch that video, you can look it up. It is strictly exactly on this subject, and she shot that 2 years ago. So it's a really good, it's only about a 5-minute long one, but
Need to watch
definitely
that.
watch it. Questions? Jim, you had a question?
I think you answered it, because that standalone is not good enough for escrow in many cases to release services.
Exactly.
So you need the 50, right?
Yep.
Yep.
They need the parties to agree, otherwise they can't, because if they just released it and one party. In fact, what I was told, I don't know if there's truth in this, but what I was told is what happened a long time ago. I don't know exactly when or what, but this is the story I was told after a forms committee update. The buyer broker sent the notice for the termination on the 35R from the inspection late. And listed broker was like, sorry, you guys waived it, you're late. It was due, yesterday or whatever, by 9 PM, you never delivered it. Changed the property to pending, and we're moving forward and seller's not doing anything. So they're like, oh, okay. Well, they sent the 35R to escrow. And, they highlighted this and they said, hey, the seller has signed this. They've already agreed. You got to release the money
Based on that,
based on this.
right?
So what did escrow do? Okay,
Right.
here, I guess we'll give the money.
Oh gosh.
And then, yeah, exactly. Then the listing broker, the seller was like, hey, what happened? Because then they ghosted them. And then they contacted escrow and said, hey, we're gonna go ahead and interplead this. And they go, well, we already given them the money back. And then they had to, go after escrow, and escrow had to pay the money to the seller. So ever since that, they're like, we're not releasing, then they're like, okay, escrow, you cannot release this unless you've got mutual agreement on releasing those funds. So it's critical. Anything else, Zoom people? Yeah. All right, let's continue the journey here. Number 6, let's see, Carolina, you want to read number 6? Oh, let me get back up.
Oh,
There,
yep.
there.
Optional insurance coverages. This addendum automatically makes it a contingency for the buyer to obtain a binder for a standard policy of homeowners insurance at or below the specified premium and deductible amounts. If the buyer desires to include obtaining a binder for the coverages as part to this contingency, mark the box for each applicable coverage. Note, if the buyer is obtaining a loan, the buyer must mark the first optional box for this contingency to include obtaining additional coverages required by the buyer's lender.
All right, so first things first. It says additional coverages required by buyer's lender. So if buyer's getting a loan, you guys are going to be marking this box every time. You're just going to have to. If they're getting a loan, because it states right there, additional coverage is required by buyer's lender. So what other, and again, look at the dollar amounts and the percentage. It's again 0.5%, so 0.5%, and then flat dollar. So it's keeping to those same standard, right? I mean, they're pretty much throughout the form they're doing that, but you already know lines 19 and 20 are going to have to be marked if buyer's getting a loan. So don't miss that one. It's exactly the same as above, but any additional coverages, it's there. What kind of additional coverages you think the lender might require? What do you guys think?
Flood.
Flood, that's going to be a big one for sure. What else? Earthquake, fire, I just said it. I mean, those are your 3 big E's.
Wind, nature, tornadoes.
I did read, where did I see it?
Maybe what Florida is.
Well, landslide, but which all these other ones are going to be separated when we get to this, all these next sections. So how do you guys know you're going to need flood insurance?
You can look at the flood zone map, whatever. Yeah.
Flood map.
In Matrix, when you go into a listing, let's see. Let me find an area here that might. Nah. Oh, I only have King County on this one anyway. For Market Watch. Let's just go to an area. Oh, actually, let's do, where's a heavy flooding? Howlets?
It'd probably be Snohomish County, depending on one of the rivers there.
There too. Snohomish. Do those. And let's jump to a map. Guys. Let's check. Maybe this guy, I don't know. So in each listing, there is a flood map tab at the very end. And you can see, well, this one says it's out of it, but here is all of the different zones. So you got the 100-year floodway, coastal 100-year, 100-year, 100-year floodplain.
Go to Sultan. They have they're
You could do Maplewood in Renton.
Oh, yeah, that's true too.
From experience,
It is very expensive. I almost bought a house there. So, but flood insurance is crazy expensive and something to be mindful of. So Maplewood was an area where it was designated Y, but then it reverted back itself to an X. So just because they do that, that means that anytime an insurance policy can say, well, now you're in a flood zone. You've got to be very cautious.
Yeah. This one.
There you go. AE right there.
There you go. So use that tab if you're looking at listings. You know, that's one of the quick way that you can jump right in and then hit and see, okay, what's the flood zone? What's it look like? And as soon as you see it's in something like that, there you go. That's your red flag to kind of say, uh-oh, well, I better talk to the lender and say, hey, this property looks like it's in the 100-year floodplain. So, you know, what additional stuff are we going to need, lender? All right, so all of these items are separate contingencies for these specific insurance types. You've got the flood, you've got landslide. Why would you think you would use a landslide?
I mean,
because your flood won't cover it.
Maybe it's, yeah, well, not in the flood zone, maybe it's on a hillside.
yeah, lots of rain.
yeah, the slope of the hill. Critical
Yeah,
area.
how do you think you guys can find that out?
Geoengineer.
Yeah, how would you like on that landslide?
King County maps.
So there is, let's go back to the map. You can get a little bit of an idea. I think if Marysville definitely has got some high, like bank stuff and crazy things. So in the layers, I believe we can go to, where is it?
The obvious one would be is if you're looking at a house that's right on a steep hillside or there's something around it.
Yeah.
You would just have to determine that by just like looking at it.
Like you was mentioning, it's on the GIS.
There was
site with-
one. Yeah, for sure, you're gonna find it in, there's one you can see. I guess that is just the boundary. Well, you have to zoom in more, but if you like zoom in into the map, you can actually go layers and then actually put flood zones. And once it's on, you can kind of see. You have to be zoomed in at a certain point. kind of see it. But look at that, there's spots that go, oh, there's even a green. Or yellow. Yeah, 500 year. So probably on some sort of a massive creek, but there's stuff that literally you would not think that's, oh, that's nowhere near the water, but there's like a creek or stream that goes all the way through this. So you'd be surprised when half your parcel's 100-year floodplain.
It's like in Issaquah, a lot of times you don't think about that, but then
Yeah.
that creek that runs through there is overflowing like every couple years.
Yep. Let me find here, we'll just open up a listing.
But for the slides though, that one's, I don't know.
Yeah, a
That's
little bit harder. You
Yeah.
can click in on here. Open up Realist. And I think Realist has the. Let's see, you can go back and then that shows the map. And maybe it's in this one that you can see it. Oh, there's flood. So it's got it in that also. I could have sworn there's another. Where is it? Where is it? One of these. That's manager.
So if you were concerned about it being in a slide area, would you click on the for the insurance and then maybe do like a feasibility to see if, is that how you would determine if it was?
Well, you could do a feasibility on anything. That's, I mean, just because it's, single family residential, doesn't mean that you can't do that, but.
You go and say, you'd like to bring in a geo survey to make sure that this isn't in a slide area or something?
Yeah.
Yeah, I think the insurance company would be more concerned than you would about that. So when they apply for insurance, the insurance company would have that data.
Yeah.
Map. Oh, terrain. Here's terrain. So in the drop down, you can see. Here, let me turn off flood.
Then sometimes buyers, they get kind of sideways, oh, this is close to the power lines. Should we get somebody out to make sure that?
Right.
So you see how you've got terrain turned on inside the map in Realist? That gives you an idea of some hillsides. And of course, visibly, you're there. You see a huge drop off.
Yeah.
I mean, that's definitely going to be your first, foremost, probably signal that, okay, maybe we should look at this. There was a house years ago, we had a listing here and one of our listing brokers were listing the property and they had said that, hey, in the middle of the night of the listing, about 20 feet of the backyard fell down the hill. And they're like, and that now makes it, now there's only about 45 feet before the drop off.
Yeah.
Oh, right to the back of the house. They're like, is that an issue? Yeah, that's an issue. It's better call a structural engineer and get.
We were in contract, my wife and I, to buy a house out in Maple Woods, and it was like a beautiful view of the Mount Rainier and everything, but it was a pretty steep slope that they had there. And it was new construction, and we went pre-construction and we picked out all of our niceties and stuff. And then about a month or two into the build out, King County red flagged it as a slide area.
Ooh.
So obviously they do check that out.
Yeah.
We were able to get out of the contract because my wife was like, we don't want a sled that's gonna slide down but they retrofitted it with all of the geo grid and all that kind of stuff, but we got out of that contract. So King County does flag stuff. I just don't know where they would put that information.
Yeah, you'd probably have to call the county directly. And that's something that, something that's in a hill area. Yeah, I would have the buyer contact the county and the city or anywhere that's part of the planning and land services department that handles, anything for building or anything like that, the code for that property.
Yeah.
Just want to do your due diligence. All right, let's continue. Earthquake insurance, no idea how you would find that one out. I have heard of it, it's comes up from time to time.
I was
Comment?
thinking, so I was trying to figure out the landside stuff, so back to being with earthquakes, so if you go to the Washington Geological Information Portal.
Mhm.
They'll tell you about earthquake areas, critical areas for landslide as well too.
Oh, nice, for Washington.
Washington Geological.
Geological.
I'll send it to you.
Okay, that's cool.
That is kind of the bummer with insurance is like if you have flood insurance, but if something happens where there's water damage, but it wasn't from a flood, you're not covered. Because they're always trying to find a way to,
A loophole.
into the coverages that they do, unfortunately.
Yeah, unfortunately. All right, lines 30 through 32 is a blank insurance coverage. I don't know, I really don't know. I don't know what you would put in this,
Umbrella.
I guess. I don't know. I don't know what else you would be, what you would have in that. So listing brokers, when you receive an offer. And what are you gonna do if every one of these are marked?
Go for it.
Serious, what are you guys gonna do?
Ask for backup offers.
Yeah,
What are you gonna do?
Counter with, you want to see a binder.
yeah, I don't know if I would sign off on that until you would at least get, insight to like, like, are you guys gonna get covered? Like, really? If you want a contingency for every one of those, it's definitely something, probably as a listing broker and, talking to our sellers, I'd be like, I don't think we should sign off on this.
Yeah.
They pretty much are gonna have an out for every type of insurance type.
For the last one, I was thinking maybe what we were asking for before, maybe there's a business or something random property, or maybe there's like,
Oh, could,
and then you need a
Yeah.
secondary like umbrella policy to cover
Could.
that aspect of the property maybe.
what about rentals? What if it's got an ADU or DADU?
Yeah.
You might need an additional type of coverage or something, rental coverage. So that could be something you could write in also, right? But again. Are you guys gonna, I think you will start seeing these. There are some firms that I was told that have already implemented this. I have not heard anybody say they saw one already. I know we have a couple brokers in this office. I know that do use this quite often. And they've even had questions from the listing broker, like, what form is this? I've never seen this. This is a new form? It's not a new form. This thing's been around a long time, the whole time I've been in the business. It's just that it's been newly updated, greatly updated. It used to be, none of this other stuff I don't think was even on. Yeah, it wasn't even on there. It was pretty much this much info, pretty small. And it certainly never even talked about to exceed a cost. That's the biggest piece to the update.
Well, I think it's because of the financing.
Yeah.
It's the DTIs.
Yeah.
Because if your coverage was quoted at like $1,000, then it comes back at 3,000.
Yeah.
Now
Now they can't afford it.
your DTIs don't match up.
All right, number 7, let's see, Amit, you wanna read 7?
Insurance contingency, insert the number of days that buyer will have to make application for homeowners insurance. And each additional coverage the buyer marked in the optional list. Note that if the buyer fails to make application within the designated period of time, the insurance contingency will be deemed waived.
All right, so the first, kind of box of the fill-in is how long of a contingency are they gonna have to make the application?
Kind of like financing.
Yeah, look, like, come on. So down on the bottom here, by default, it is 5 days. I think that's plenty, I don't know. Realistically, like we talked about in the beginning of this session, for this form, conversations about insurance need to happen even before you might even write it. Joe?
So if they want to get out of the deal, let's say they want to rescind the deal based on that, we requiring them to give proof that they made application for insurance on time?
So,
Just like financing or?
this is the part about the form that's gonna be tough.
Yeah,
In 22A, it does state earnest money, right?
right.
You got 3 items you gotta give, to fully complete to make certain they did everything right. So we can provide evidence to our sellers that yes, they did it right. Now we can go ahead and not dispute the earnest money. There's nothing in here that says there's a contingency for our seller, if there's any teeth at all that we can ask. Does that prohibit you from asking? What would you guys ask? Jim brings up one of the best points that we really need to kind of get clarity on for this form.
Have you chosen an insurance company yet? Have you?
Yeah. Who's your insurance? How about who is your insurance company?
Inquired about getting a binder? Has it? Yeah.
So listing brokers need to now kind of pick up the phone, do some due diligence and having conversation. Maybe with the insurance person. Who's your insurance person? Would you provide me the info?
So you call your lender,
Yeah.
and say, hey, is this pre-approval letter? What is this? Hey, is this insurance binder?
Yeah,
Next phone call.
yeah. So you guys are gonna have to do a little more work whenever, listing brokers, whenever you have this form in your offer, then it's gonna be time to kind of pick up the phone and get some insight before you guys even accept this.
Yeah, and then if you're on the buyer side, you're like, hey, lender, can you call the seller's broker? The insurance agent, can you call the seller's broker to let them know that we have done this?
Yeah. So you get this offer, you get an offer, 22 VVs in there, and line 33 says 10 days. Listing broker, what are you gonna wanna do? Would you wanna give them 10 days even to make the damn application?
No,
No way.
Well, sometimes 5 days and 10 days would be pretty close.
I would do
Good point.
Yeah, but I'd do like a 3-day thing.
So
Buyer brokers and listing brokers.
maybe you're countering that and say, no way, I wanna see 3 days or 2.
Or do
Go
your
make
homework
that
before you
application
submit.
right away if you're having this
Yeah,
contingency. If we gotta deal with, where this is gonna be in our offer. I'm gonna throw in a huge monkey wrench here at the end when we get to this part, because this is the part that is gonna be difficult, but you guys are gonna see in a sec here. All right, number 8, I'll have Jason read 8.
Sure, insurance deadline. Insert the number of days that the buyer will have to give notice of buyer's inability to obtain complying homeowners insurance and each additional coverage the buyer marked in the optional list. Form 90VV, buyer's notice of termination, quotes, homeowner insurance is unavailable and quote, can used to provide this notice. Again, if the buyer fails to timely give notice, the insurance contingency will be deemed satisfied or waived automatically.
Yeah, and then initials and dates signed around, it's all golden. Okay. I'm gonna throw a little monkey wrench in here for this session here today, because I want you guys to think about this, because this could be something that happens. You get a multiple offer situation, got a lot of deals, 22 VV is in every one of them. Okay, here's your scenario. The offer you guys sign off on was the best offer in your seller's eyes. And it had 2 days on line 33 for them to make application, and it had 10 days for the contingency. They waived inspection, they waived Form 17, they waived information verification period. They waived everything else. There was no other contingencies even in the entire agreement except for this.
I mean,
Do you guys know where I'm going?
So you're off market for 10 days.
Yeah. And then the buyer broker sends over the 90 VV and says, and a 50. Says, well, we're out. Buyer couldn't get insurance.
I mean, we could ask for proof, but like a paper trail, like, how do I know?
How do you guys know the buyer did not qualify?
Yeah, because it could have been their backup plan, right? Like, so they found something else that they wanted to pursue. Yeah, how do you?
Well, I want you guys to answer. Think about it. What are you gonna do? You're listing brokers.
I mean, I guess I'd counter in the beginning, so I want proof of history, track history, right? If you're to avoid you potentially pulling out of the offer, like, and you're doing your homework, I'll do my homework to help to.
Earnest money, non-refundable.
Yeah, if you had earnest money non-refundable, you probably wouldn't be worrying about this thing. Gavin, what would you do?
I would call insurance companies and see if they could be like, hey, this is my house. I have a buyer saying they can't insure it. what do you guys think? And if they're like,
So
yeah,
don't forget, it's not just being insured, right? They can do it, but now you got caps on the premiums.
Yeah,
So you guys, if this form is used and you're a listing broker, you really gotta pay close attention to the two, to those things. And how you get proof for your seller, because remember, buyer's gonna have a right to just give notice, they're done. There's nothing that the seller has to even sign, but how do you fight for your seller and say, I want proof? How are you gonna get it?
We talked before though, each insurance company will have different rates, and so.
Yeah,
So it's really hard. It's not like a lender where it's like, it's pretty standard. Well, I mean, each one has their own underlying criteria, so
yeah,
it's tough.
it's really
It's
tough.
almost like a get out of jail.
it is 100%.
That's why I wanted to bring this up to your attention at the very end, and Amit he
Yeah.
brought it up, he's like, wait a minute, how's the seller? So, this is the thing that you guys really gotta think about, because if this form does get used more in the future, and I truly believe it's going to, so does Erin, our own legal counsel believes, we're gonna start seeing this, and she's gonna even say that we are gonna wanna start using it more. But I wanted to make sure you guys understand that this is going to change the way each deal happens if this form's in there, because how do you get the proof when you don't even have a right to do so to get it? I mean, realistically,
Yeah, like we're talking at the beginning, though, at the beginning, you should ask and see if you can get a copy of the binder before you'd even accept it. Kind of like when we give the pre-approval letter with financing.
yeah,
You have the proof of funds, and then also just ask for it.
maybe.
But there isn't is there a form where you could ask for it? You know, like how you can ask for proof of funds? No.
Could you put it in a 34 and just,
I mean,
So the communication, I guess you would say, hey, you know what, for us to accept this offer, we really need to see a binder. Especially since you're using this form to make sure that you do have at least started the ball rolling, seeing if you get your insurance,
yeah,
something like that, maybe. Again, it's just.
to the premium that you're stating you want a contingency
Yeah,
for.
exactly.
That's the other piece to it.
Mhm.
So what do you guys think? I mean,
Sounds pretty great.
sounds pretty great.
yeah.
Welcome to real estate.
Clear as mud, huh?
Welcome to real estate.
Any last conversations, you guys, before we jump to our next forms? These next ones will be quick, but it is important for us to understand and know. What do you guys?
You were on the listing side, Eric, what would you to advise your client? That call, get the binder up front and all that?
Oh, no matter what, you gotta have conversations.
Yeah.
And I think how the conversations go, if you get to talk to all the right parties, it's gonna help you probably accept a deal that has it in there. But you might be stuck in situations if your house is in a critical area somehow that, oh, it is on a hillside.
Yeah.
Ooh, great, or it does need flood insurance, and you already know it. Jim?
Well, if you can, you might want to have it run concurrently with other contingencies or, review of Form 17, inspection contingency or whatever, so the dates don't exceed those other contingencies that you have in the deal. So you know what you have at the end of 5 days or 7 days. Totally.
Yeah, no, it's always good to do that. If you got contingencies anyway, I mean, you should obviously every deal you get mutual on, you should review and go through the whole thing of what is the timeline for when are these contingencies due by? And you should have a day before reminder. And the day of, do 2 reminders. If you use Outlook, just do the calendar, reminder for it to pop up, with an alarm or anything you gotta do, or set it in your phone, however you do it. That's what all transaction coordinators do. They'll go through the entire contract, list every contingency, when is the deadline. But it's up to you to get the reminders in there to make sure you review it in time. All right, now that I fully scared you guys, let's jump to the next form. Modification of closing date addendum. So any single time a deal is being changed to close different than what's on the contract, that is why it is clearly called a modification of closing date. Do you know how many times I see Form 34s written in that says closing date is now this on a Form 34? you know how many times?
And or sooner.
Oh, we're gonna talk about that, don't worry. Still to this day, all the time. The thing you gotta keep in mind, and I say this every forms class, every so often, is that there's a form for that, there's a form for that. There's a form for that, there's a committee, there's attorneys that put these forms together, they understand there is a lot of issues and a lot of things. And of course, they need to have forms that are already pre-drafted for you guys to fill in the boxes. Every single time you're writing in 34, you're pretty much raising your hand and saying, I'm acting like an attorney. And no, Ricky, you can't give that to your wife. But you really got to take the time and understand that, you know, when it comes to changing the dates, you know, there is a form already for that. So that's why that it's called a modification of closing date. That's if you're modifying it to close earlier or closing later. Most of the time it's used for closing what? Later. A lot of the times it's because you guys aren't closing on time and you need to extend. And we're going to talk about a couple other extra things, but first things first, let me get back there right there real quick. One, because we do have to have this conversation every single time. And I think it was Jason already brought it up about the or sooner. Who said or sooner? Ahmed did. All right, closing date. Or sooner. How many times you guys see that?
I got in trouble a long time ago. Yeah.
You in trouble for doing that?
Yeah, our DB was like, don't ever write that crap in there, like, it's good, that, like, if you need to change it, you change it, if you're gonna close earlier, if you wanna extend it, you can.
Okay, so Ahmed, what is your definition of or sooner? When is that?
So, I mean, anything before the 9th would be, you know, but again, I just, what's the point?
True, you just put it.
What's yours, Ricky? What do you think? What's or sooner mean?
Same, yeah. I mean, anything for the night, for sure.
But title and escrow, they want a specific date, so they know how to plan for.
Will title and escrow accept a deal signed around that says this?
No.
Yes.
Yes.
They will.
Yes,
Yeah.
they will.
They certainly will.
Contracts have to have a start and ending date.
Mhm.
So- Or sooner is a terrible idea. Terrible idea to write it on a contract. And this is the main reason why. Because you cannot define for sure when is sooner. When is that sooner gonna happen? There's a very famous court or a case that happened in Washington. Very expensive home. One of the ones where they gotta hide the address, right? One of those where like all of a sudden it shows in the map and you know the little house icons in the middle of the water in Lake Washington. You guys know when you see that, you're like, where's this house? Must be a submarine. Very famous court case that happened. I think it's about 6 or 7 years ago now. Anyway, this is the scenario. What happened? Multiple offers, got a great deal. The buyer broker wrote the closing date or sooner was written in after it. And they got mutual. Next day, a much, much better offer came in with astronomical non-refundable money. Let them live in the house for 6 months free. I mean, we're talking hundreds of thousands of dollars more. So, seller called her attorney. Attorney reviewed the deal. Attorney said, we can get you the next deal. You want to know how? Because the broker, two things in the court case that they noted. Not only were they smart enough and wrote or sooner, but they left a bunch of all of the blanks throughout the whole contract set to default. And the attorney said the broker did not give reasonable skill and care because they did not take the time to actually fill in the blanks. So they said, you're going to go ahead and call escrow or show up to escrow. Don't call them. Go to escrow tomorrow morning as soon as they open and demand that you are ready to sign your documents and you are ready to close. So that's what they did. The seller went and they said, okay, I'm here for closing. I'd like to sign my documents. And she sat in the lobby until they were ready to prepare her docs. She said, I'm not leaving until I sign today. And they got on the phone and said, we don't know what's going on. Call the other broker calls the list broker, like, what's happening? And the list broker is like, my seller's ready. That's all they were instructed to communicate. So the seller's ready to close. And they said, well, we're not ready. We can't close. You said you were. If you can't close, then you're going to have to terminate the agreement because my seller's signing today and she wants today to be closing. And they could not do it. So they moved to the side and of course sold it to someone else. So that's just one famous case. And there are others where or sooner can be any other time that anybody else wants. So when you write those words, I want you to remember that story. Like, are you setting yourself up to where they can't perform? Because they also wanted the earnest money. They wanted the earnest money in that deal because they couldn't perform like they said they could. Jim?
So devil's advocate, what if you put or sooner by agreement of the parties?
Kind of nebulous language.
Which means
What
both
is-
parties would have to agree as to a sooner closing date. I'm not saying we do it, I'm just saying it could be written in that way. Whereas both parties, if they both agree to
Let's see.
close sooner, they can do that, otherwise. they
Or
have to wait.
sooner if, what'd you say?
By agreement of the parties.
Agreement. You can't
Between
even
the
fit
parties.
it. You
Well,
know,
yeah, right, you put on it down, I'm just devil's
Yeah.
advocate,
yeah.
theoretically.
My whole point, just avoid it
No,
at
no, you're right.
all costs.
100%.
If someone can close earlier, you guys can communicate that, say, look, this is the closing date, we put it on the front.
Modify the closing date on the form.
We will execute a 22Y and we'll modify the closing date, as soon as we know for sure what will be the date and we'll get the seller to sign off on it as well. So both parties can actually have a date. Cause escrow is gonna be like, well, what's the date? You need to tell us. If you don't tell us, a seller could just walk in and say, I'm ready to close today. But we just got mutual last night.
Or buyer.
Doesn't matter.
I mean,
Or the
if-
buyer.
buyer
The
can
buyer
say,
can
"We
go
wanna
do
close."
this exact same thing.
Yeah.
Like, here's my cash. You can walk in with this suitcases full of cash and
Ready to
go,
close.
I'm ready to close. I'm ready. It's today.
You get an offer, you're the listing broker, and it says end sooner, everything on there is perfect. You just want to sign it around and be under contract, can you clean it up after?
Well, I mean,
Contract.
cleaning things up after, you can never,
But do you want to counter that?
you know what? I'm always gonna tell you guys this for all sorts of, situations that I'm okay with you guys getting mutual. Tying the thing up, moving it forward and then correcting things later if it's gonna mean you get the deal right away and it's good for the seller. But I do want to make certain you communicate these types of issues via email to your principal, to whoever you represent, whether,
How would
they
you-
write it.
How would you clean that up? Would you strike out initials or would you do, how would you?
I think you probably have to use language like Jim says later, because making counters on the thing, I mean, it's after.
Yeah.
You're not supposed to do that. You're actually supposed to use a 34.
Think of that.
And you would just put for clarification purposes, closing date is this. In the event both parties want to amend this, a 22Y form will be executed, whatever. I mean, you could do something as simple as that.
But you're all tied up. It's all-
Yeah. But I just want you to remember that story whenever you see the words or sooner, or whatever. What's the other one I see? Or sooner, or
Sooner is usually what they do.
there's some, yeah, that's the most common one. All right. We are done with that one. So use other dates. If the parties agree to change the closing date, they may also wish or need to change other dates and time periods set forth in the agreement. For example, buyer may like additional time to comply with buyer's financing or inspection contingency. On the other hand, if the parties move the closing date up, they may need to adjust some or all of their contingency deadlines accordingly. So in the form itself, you got the line for what is closing date. And again, don't use or sooner on this also. I still see that. Especially when it comes to extending the transaction. That's where I usually see it. Next section is for other dates. So just like it said, if you got other contingencies you need to extend or whatever, that's where this is. And you would just number them down or something like that, or letter them. You could put A, the financing contingency, deadline is now this date. You can do something like that. And then the very last but not least is other. You got a nice little form 34 down here where you guys can write in all sorts of good stuff. Now, we kind of established at the beginning of this form that most of the time it's for modifying the date to be later. You're the listing broker. You're on the second or third extension for this buyer. What's the most common conversation that comes up when you're in that situation? What are you typically looking to do before you sign off on another one? What?
Non-refundable earnest money.
Earnest money? Yeah.
Well, also you wanna make sure that you're signing this for certainty that it will close, like a.
Yeah.
Is there-
Like what kind of a thing can we do to guarantee they're actually gonna close this time?
We're only gonna sign this.
Or their financing, the way their financing is good.
Yeah, you're always trying to establish certainty, right? For our clients. So in transaction desk, I do have an office clause for non-refundable earnest money for an extension. So I'm gonna show you how to use it. As soon as transaction desk starts here. Let's see, I'll do it in my transactions, that doesn't matter. We're gonna do a form. Add. We'll go from to Y. Select it. Add it. Open it up. All right, so here's your modification of the date that you're gonna close. Here it is. Here's the box for your other dates. The other, as soon as you select it, you see how it turns from that light green, or it turns from the light blue to the light green. That shows you the box is activated and ready to be typed in. You've got your add clause here or up here, doesn't matter, either one's the same button. Click it. Go to office clauses. And now in here, go to the non-refundable earnest money for extension. Right here, earnest money release for extension of closing. Select it. Hit OK. Bam, fills it in. Gives you the language. So now you could say the amount of money, earnest money was, I don't know, $5,000. So 5,000 of the earnest money deposit, or maybe you're getting some of the money, whatever you guys decide, you and the seller, talk it out. And make sure you communicate to the buyer broker that, hey, for this third extension or whatever extension, the seller wants to make certain that you guys are gonna close. Because now we're putting, you keep putting us off. This is damaging to our seller. We're gonna see earnest money is gonna be non-refundable. It actually has a delivery. Which I don't know why that has it in there, but.
When you write 5,000 in, do you have to actually write 5,002 like in parentheses?
No, you don't. This has a thing for a Form 34 in the event you were trying to do that on a 34, but you don't need that. The release fund shall be property of seller, then shall become a non-refundable deposit, but it will still be applicable towards the sale. In the event the sale does not close.
Title and escrow, does it show like on the final settlement as that was released prior? How does that look?
It's still, yeah, it's still there. It's still showing that it's there, but it's already credited into the seller side.
Got it.
It's listed still. And I think it even says credited or something like that in parentheses on it. But you got language now that basically says for this extension, all right, buyer, my seller's gonna give you, another week, 2 weeks, whatever it is, you guys are deciding. Now you got some language and some teeth into the deal that we'll go ahead and give you an extension, but now there's a penalty if you don't close this time. So that is in transaction desk in your office clauses.
I have a story real quick, I guess, to share that. I had to do 3 extensions. The last one, we did have to release the earnest money.
You did, huh?
And ultimately, finance didn't go through, so we still had financing contingency alive. But the title company didn't actually release to the seller, so it was still with title. We were able to get 5,000 back.
All of it back.
5,000
Oh.
of it. I agreed. I was like, okay, just.
So they never released it,
The
even
title
though
company-
you had an agreement to do so?
Yeah, so that was a big no on the title company. The seller was like, we're gonna, I don't know what she handled the title company, like. Maybe they just made her whole and gave
Yeah,
us the half, but yeah, it's huge. I never want to go through that again.
no, it's not good.
Yeah.
Delayed,
So, yeah, the
delayed.
letter, I'm not working with that person again,
All right, next form real fast. There are two 22Ys. There's 22Y, the standard modification of closing date, and then you have the 22Y dash recording. Thanks to the pandemic, this form was created because counties couldn't keep up with the closings and everything was being delayed. So now that caused a lot of headaches and issues with that. So the forms committee and, the Northwest MLS and the attorneys had no choice but to create this form. Because what was happening is they would release to record. The county wasn't gonna record it. To the title company, they were like, we're done. The funds have been given to the seller, we're finished. But then some sellers were like, well, wait a minute, it's not recording. I can't have someone move in this house. What if they burn it down? What if something happens? They could say it's not my house yet. I didn't even get possession. So it caused a lot of issues and they're like, oh my goodness. Well, all the attorneys from the title companies, all the attorneys from the MLS got together and they had to basically figure this out. And basically what they would say is that closing is when the documents are recorded, right? That's what closing means. But escrow would have to basically state that, yes, that is what we believe, but the county wouldn't recognize it until they record it. So this form is required. Are counties still having this issue today? Do you guys know?
I don't know, but potentially, I don't know.
I think they're caught.
It's still happening. It's rare, but it's still happening. We had one towards the beginning of the year already. So you could have times where, because what do brokers do? They pick closing dates for when? When are closing dates mostly happening?
Right.
End of the month, the last day of the month.
Title doesn't have, because they have refinances.
Yeah, they got refinance, they got a bunch of recordings happening. So when you choose the very last day of the month, know that is the busiest day. Title and escrow have the hardest time getting everything done. So in the event that they're late, they send it off at the last second, oh, we just made the cutoff to county.
I like to do mine kind of like maybe the second to the last week of the month and like on a Thursday.
Yeah.
So if something happens, you have Friday to.
Yeah, I like Wednesdays Wednesdays are good too, because they're not quite as busy.
Actually before the weekend too. So
Yep. So take a look at timing for that. The Northwest MLS purchase sale agreements define closing as the date on which all documents are recorded and the sale proceeds are available to seller. Several county recording offices cannot commit to recording closing documents the day received, even if the documents are received by the established deadlines. Thus, escrow may or may not be able to close as required by the purchase and sale agreement. Despite the parties' best efforts, Form 22Y recording revises the definition of closing to address this challenge. Revised definition of closing. The form provides in the event that through no fault of the parties, the county recording office fails to record the closing documents, the day that the documents are submitted for recording, the parties agree to the following revised definition of closing. Closing is the date on which, 1, the closing documents are submitted to the county for recording, 2, the sale proceeds are available to seller, 3, the closing agent has received the irrevocable commitment of title insurance company to deliver all title policies, and 4, the closing agent is able to satisfy any other conditions required by instructions of any other party required for closing. So they completely redefine what does closing mean in our agreements. If you are in a situation where you're talking to the title company and they say, hey, we've released a record, but we're so close to the cutoff time, I think you guys might want to execute the 22Y recording to make certain that you guys are acknowledging closing is still today, because there is a slim chance that the county may not record it. If you're in that situation at all you need is the buyer and the seller to sign off on 22Y recording, get that submitted to, title and escrow, get it obviously into SkySlope, and now closing is that same date, even if the county does not record it until the Monday.
And it's still 9 o'clock. Closing.
No, county, when does counties close?
3 o'clock? 3.
Well, their cutoff is like 3 or 4.
You can take possession at 9 p.m.
Oh, yes, possession's
Yeah.
no different.
Yeah.
This is not affecting possession. This is only the definition of what is closing.
Because typically it's recording numbers. That's when the actual changing of hands of the property happens.
Yeah. All right, county specific issue. This issue does not exist in all counties. If you are concerned that the county where the property is located could experience recording delays, you should consider including this addendum in the purchase and sale agreement. As always, if your clients have questions about this issue that you are unable to answer, you should refer them to an attorney. There were a lot of people who were like, hey, I don't want, sellers were like, they were refusing to give possession. That was going on. And it was, not fun.
Or buyer could walk.
Yeah. Buyer's like, hey, I don't get my house.
Gone.
I'm out. Contract's over. Yeah, there's a couple of issues that did happen during those times. Not seeing it as, much. But it still happens on rare occasions. But that is what the difference of the 22Y and the 22Y recording is. So you might see, I've actually seen this. It was kind of weird. I had a broker call me and say, Eric, this is weird. They included this 22Y recording form with their offer. I'm like, well, you're really not supposed to, but can you sign off on that? It's the same date as what's on the front page of the contract. You can't. Probably not something necessary, but you can. This broker said that they asked them, I go, why did you include that? They said, oh, our firm said it's a requirement. We have to submit it with every offer. Like, okay, you can.
So in the case of an audit, let's say that the closing county records it a day later from what we had originally specified. Are we out of compliance then? And there's a fine and all that? If we're.
Well, if you're past your date, past your date, that's past the
Yeah.
date. It's done.
Okay.
Yeah.
Yeah.
Something else, one last thing that is different compared to just the 22Y and the 22Y recording Does anybody know? Bonus question.
What?
There's another item that's on the form.
65A.
Mm-mm. All right, since we're running out of time anyway, it is the insurance. Very unique that it talks about insurance on this form because the parties are advised to consult with their respective property and hazard insurance companies to confirm adequate coverage on closing as defined in this addendum. So now they're making sure that the parties send this to their insurance because
Could be a day.
there could be one day that might really go to the Monday. They move in, insurance could say, oh, it burns to the ground. They're like, oh, sorry, buyer, you're not covered. We define our closing date as what your contract originally said. So make certain, it says right there that they're gonna consult with insurance. And I thought that tied in pretty well today since we had the 22 VV. And the 22Y recording as well. So that is what's difference between the 22Y recording and 22Y. So it says that they're gonna talk to insurance too. Cause they don't want nobody wants any, dealings with, in the event that they're gonna state that they're not gonna cover the client. Because you're going to use, you're gonna go ahead and act as today is the closing, even though the recording numbers are not in.
Would the seller's insurance still be intact though?
That, well, see, conversation.
Yeah.
Sorry, not an insurance agent, nor have I ever played one on TV. So you kind of have to have that same, conversation with the clients to make certain that insurance is okay.
Yeah, well, it's like all the conversations you have with your buyers. You're like, make sure you set up your utilities, make sure
Yeah.
with your sellers, like, oh, we're extending, make sure your insurance coverage is still gonna be in, we were scheduled to close on this date, now it's gonna be 3 days later. Make sure you're still covered. Just
Yeah.
all the conversations you have.
Yep. All right, you guys, that is forms class for today. Thank you for making it, and we will see you guys on the next one. Bye, guys.
Thank you, Eric.
Thank you, Esteban. Thank you.